Hi, I'm Alex Carter, and welcome back to the channel. Today, we're tackling one of the most exciting ways technology is changing the world: Fintech. Imagine not having a bank account, no access to credit, and no safe way to save or send money. For 1.7 billion people worldwide, that's their reality. But here's the game changer. Financial technology, or Fintech, is stepping in to break down barriers that traditional banks couldn't. From mobile money to blockchain, Fintech is making financial services accessible to millions of unbanked and underbanked individuals, especially in developing countries. So, grab a coffee, and let's explore how Fintech is reshaping lives, driving economic growth, and creating opportunities in places where they're needed most. Before diving into Fintech's role, let's define the challenge. Financial inclusion means providing affordable and accessible financial services, like savings, credit, insurance, and payments, to everyone regardless of income or location. It's a critical driver of economic growth and poverty reduction. Yet 1.7 billion adults worldwide remain unbanked. Why? Distance. Banks don't operate in remote areas. Cost. High fees keep financial services out of reach for low-income families. Paperwork. Many lack the formal identification required to open an account. Financial literacy. A lack of understanding of financial products creates additional barriers. These obstacles perpetuate cycles of poverty, particularly in sub-Saharan Africa, South Asia, and parts of Latin America. Traditional banks have struggled to solve these problems, but Fintech is stepping in with innovative solutions. So, how is Fintech making financial inclusion a reality? Let's break it down. One of the most revolutionary tools is mobile money. Picture this. You live in a rural village with no bank in sight, but you do have a mobile phone. With mobile money platforms like M-Pesa in Kenya, you can deposit, withdraw, and transfer money, all without a bank account. The results speak for themselves. Over 80% of Kenya's population uses M-Pesa. Mobile money is cheap, convenient, and accessible. It's also expanding to include microloans, savings accounts, and even insurance. The lesson here? You don't need a traditional bank branch to unlock financial services, you just need a phone. What about credit? Traditional banks often exclude people without collateral or credit histories. But Fintech platforms like Tala use alternative data, such as mobile usage or bill payments, to assess creditworthiness. This opens the door to microloans for small businesses and individuals, helping them grow their incomes and achieve financial independence. It's not just about loans, it's about building trust and introducing people to the formal financial system. Now let's talk about blockchain. In countries with unstable currencies or corrupt financial systems, blockchain offers transparency and security. Take cross-border remittances as an example. Migrant workers often send money home, but fees are high, and the process can be slow. Blockchain-based platforms like Stellar reduce costs and speed up transactions. There's also potential for blockchain to provide secure identities for those without formal documentation, a key barrier to accessing financial services. That said, challenges like internet access and cryptocurrency volatility mean blockchain adoption is still in its early stages. While Fintech is promising, it's not without hurdles. Here are some of the biggest challenges we need to tackle. Digital divide. Millions of people in developing countries still lack smartphones or reliable internet, creating a new form of exclusion. Cybersecurity. With more digital transactions comes a greater risk of fraud and data breaches. Protecting users is paramount. Financial literacy. Many first-time users need education to navigate digital tools effectively. Regulatory balance. Governments must create rules that encourage innovation while protecting consumers. To unlock fintech's full potential, these obstacles must be addressed through partnerships and innovation. Fintech isn't just about reducing economic inequality, it's also tackling gender inequality. In many regions, women face additional barriers to accessing financial services, from cultural norms to a lack of collateral. But fintech is bridging the gap. For example, platforms like M-Pesa have empowered women in sub-Saharan Africa to manage their own finances and start businesses. Fintechs are designing products tailored to women, such as savings tools for irregular incomes or microloans with flexible repayment terms. When women have access to financial tools, they invest in their families, businesses, and communities, creating ripple effects of economic growth. So, what does the future hold for fintech in developing countries? Here are some key areas to watch. Infrastructure investment. Expanding internet access and providing affordable smartphones are crucial. Partnerships. Governments, fintechs, and NGOs need to collaborate to create inclusive ecosystems. Regulatory sandboxes. Testing new products in controlled environments will foster innovation while managing risks. Education. Financial literacy programs will empower users to make informed decisions. Fintech is about more than technology. It's about building a fairer, more inclusive financial system where everyone has a chance to thrive. Fintech is more than a buzzword. It's a lifeline for millions of people around the world. From mobile money to blockchain, the innovations we've discussed today are transforming lives and unlocking opportunities. But there's more to be done. What's your take? How can we ensure fintech reaches even the most marginalized communities? Let me know in the comments below. And if you enjoyed today's discussion, don't forget to hit the like button, share this video, and subscribe for more insights into how technology is shaping our world. Until next time, I'm Alex Carter, and this has been your Financial Deep Dive.